Yes, guys, good day. You're welcome to my channel once again. And today I wanted to bring to you an update of what I actually posted 2 days ago. Let's go to my channel. So I actually posted this video 2 days ago, and today I'm bringing you an update on. So it was about volatility 75, and I actually showed what the market was doing, you know, and then so just a brief one. Um, let me quickly um, let me quickly show you what happened. Sorry, the internet connectivity here is very slow today. All right. Okay. So actually, it was a video that I did trying to show you what was actually transpiring on the market. And yes, this was the video I did. I mean, this was when the market had not taken off.
There's this
I
block
was
here
showing you that the market was
which
going to
actually
come
bounced
down
the
this
price
way
back up,
and then
you know,
go up into the
when it hit
sky.
it,
And
it bounced price back
um,
up, and then show you what I'm
the
seeing
market
here
did exactly that, you know. And
on
so
top of
this was my
people
video that I
areas.
did
Okay, so here we are
on
assuming that
volatility
not
75
that
2 days ago,
and trade this
showing you
way
exactly what was going to happen. And so I'll take my
or the
time and then
liquidity
I'll show you. So
appear.
this was
Why?
my
Because
signal showing you that
my premise
I
for
was expecting
the
that price
market
was going
now
to
is
take
a bullish
liquidity
one.
down here
Okay, so this
and
is my
then
premise. So look
rise,
at this,
and then this
look at
should
this
be your
chart
take
very
profit
well,
level.
and
Although I
this is
estimated
my
that it was
premise.
going to still go
So
up
immediately
high
we
into
have
the
the
sky
price breaking down into
and
this
take down
area,
all
and
those price
it trades down
up
into,
here,
let's
you know.
say, some of these other
So that was
blocks.
a video. So this is an update on what my expectations are, and
The
then
premise.
I'm just going to quickly go through my charts. Pardon me, this video is going to be a little bit long one, and then so that we'll be able to explain things well to you. Okay, so let's quickly go to the chart. Let's quickly go to the chart. Yeah. All right. So where's volatility 75? Okay. All right. Oh, sorry. I've visited the wrong chart. So this is volatility 75 on an hourly time frame. So as you can see from the chart here, this was where I called the trade. When I called the trade, it was somewhere around this area, and I indicated that price was going to hit the highs here, and then also there was some lows here, and the expectation was that price was going to take the lows below these 2 weeks. You know, normally, the retail mindset is that if we have um, something like this, the retail mindset calls this kind of area as a support, and that's when price, the premise is that if price gets here, price should hit this line and bounce off. So for instance, as price got here, everybody would have bought, everybody would have bought into the market hoping that price was going to go up. And imagine what will happen if everyone bought from this zone. Price now begins to go down, trades against them. By the time you get here, the price takes you out of the market. And then also other traders also have the premise that, oh, okay, so I bought but it was selling, so they close the buy trade, and now they begin to sell. Price begins to sell off in hope that, oh, price is going down. After a while, price begins to reverse, and if they don't even close their trades, price begins to reverse and rather takes them into deep losses. So that's the mindset of the retail traders, But my expectations were that this point was a point where price was going to take the take the lows here and take price higher, and it did exactly just that. Okay, so why did I call this trade? Why did I think that price was going to do that? And why did I even notice that price was going to sell from this point, going to buy from this point? Let's go down to the smaller time frame as I explain much more further. Let's go down to 15 minutes time frame. Okay, so 15 minutes time frame gives us more clearer picture. So when price actually got here, are taking down the lows, and then the normal thing after price has taken down the lows, has taken the liquidity here with all the all the buy orders here, as price has taken down those liquidities, because in the market someone must sell and someone must buy, so all those who were buying here, the market sold against them, so they took down all the orders here. Whatever they were buying, someone sold against them. Okay, so it took down all the liquidities out of the market. The market is actually looking for where there is liquidity where there is cash. Those who studied accounting a little bit, liquidity is cash, where there is money, where there is substance, so the market traded against them. And now you realize that there was nothing left below here. Let's go down to up to 1 hour time, daily time frame. Notice this, that when price came down, it traded all the way. There was this portion of the market that they had only been traded once. They had only been buying, but there hadn't been any portion that price had sold. So this portion only represented the market buying, so someone must sell against it. So you notice that the market had to sell against all these areas. So anytime there is a buying, there must be selling. Someone is buying, someone is selling. That is the premise of the market. So this area was an area that actually price had to come and sell against. Someone bought and then someone must sell. So definitely that was the premise. Now let's go back to our smaller time frame, and then we'll take it from there. Okay, so this is it. At this area, when price had done all that it needed to do in this zone, my next expectation was that I was going to look for an entry. Price had bounced back the first time, bounced back the second time, bounced back the third time. Now, the third bouncing was a clear point of entry for me. When price got to this point, I noticed that the market had nothing to do than it was going to buy. And when we are in the market, we look for traces, and then yes, that's how I call it. We look for traces of things that the market really wants to do. So for instance, where are the institutional buyers, the big banks? What are they doing? What are the footsteps that they have left for us to see that they really want to buy or they really want to sell? So when price was bounced up one, the second time, the third time, then I had to look for a trace. The trace is where the institutional orders intentionally begin to buy, and what they do is that when they begin buying, they would also leave a trace that will make you believe that they want to rather sell. All right, yeah, that's what they do. So they place their market in such a way that you may believe that all institutions, they want to really sell. Then before you turn and you actually look at the market, in actual fact, they are really ready to buy. So let me show you a clear entry point. So for instance, look at this bullish candle here. When market actually intentionally did this, for instance, this point, market actually wanted to go up, then it went down. It wanted to buy again from this point, and it went down. Came up here as though it wanted to buy, and then it traded down again. So look at all the points where the market begins to try to buy. You realize that it beats it down. Try to buy, and then it was beaten down. Okay, look at this. Look at this long wick here. It tried to buy, and then it was beaten down. Then tried buying again, it was beaten down. Tried buying, it was beaten down. So usually there's this particular candle, or there's this particular price point where you will notice that the market really wants to buy. Where when price gets, I'm saying that there's this particular price point where when the market gets there, you can see clearly the trace that this was a clear point where the market actually wanted to buy, but it was actually reversed, or it was actually intentionally taken down to just woo everybody out of the market, and then they jump in. So let's look for that particular bullish candle. For instance, like this point, look at the point. Do you see any point that it what's the name? The market stood on and swung up higher. Do you see any point when I put it on top of the wick of this bullish candle here? Do you see any point from this side that the candles, any candle stood on top of it and wanted to jump up higher? We couldn't find any trace, so we wouldn't really consider it. Now let's move on. Come down to another swing point where the market swung up and then came down. Do you find any point where the market really wanted to, on this bullish candle here, before that candle that came to deceive us that the market was going to go down? Look at this candle. Do we find any swing point on top of, maybe the on top of the, at the highest point, price point of that candle, that any price stood on and wanted to swing up? Yeah, you could find. I mean, but it wasn't so clear. You know, this was a particular candle where, let me quickly shade it. Okay, guys, if you understand this, your trading will change, and your ideology about trades and correct entries, you'd really have it right. You know, yes. So this is a particular candle that price actually, you notice from this point that when price actually got to this point, price stood on that same price level and it began to have a bullish movement. Okay, so we have one point of contact here. Now let's come back again. Let's come back again and see if we can find another one. So let's look for another one. So this was a bullish movement up, and then the candle to deceive us also came in. Then another movement up, candle to deceive us came in. Usually the place where you more often find or have that refined price point where you notice that price would base on and run are candles, or are prices that are, or let me say candles that are closer to the current price. So for instance, like this area and this area, for instance, this swing here, this swing here, this swing here, they're actually far from the current, if we are assuming we don't have anything here. Okay, so for instance, we don't have any price here. We are somewhere here. This price point, this price, for instance, this price, or whatever happened here before this swing high, before this swing high, before this swing high, we would rather consider things that are more closer to the current price than what is afar. So for instance, like this, um, with this particular candle, I wouldn't really consider it. Let me look for a much more closer candle to the current price and see if I can find a very good entry there. So let's say, okay, there was this candle, this particular candle, okay, that swung up high and then price was reversed. Now it's also a bit even far away from a current maybe bullish movement that was also reversed. So let me look for more closer candle. So let me take this bullish candle here. Okay, so let me take the high of this candle. Okay, let me take the high of this candle. So I'm assuming that when price wanted to go up, this bullish candle, when the market makers intentionally wanted to push the price higher, um, the retailers, I mean, came in and as though price was going to sell, and then it began moving up. Then what happens? Okay, let's see. Then we see a movement up. A candle breaks above this particular price point. Okay, and then let's see that we see another candle opening a little bit above it, a little bit above this particular price point. Then let's see what next. What happens next? Now we have a particular price here that opens slightly and never even comes close to um, 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 the highest point of this bullish candle. That actually gave me a signal that the market was going to go up higher. So this would have been a very clear entry point showing that buyers had their price level, then it would have been a clear entry. So at the close of this candle, you could have made an entry. Now let's go even down to smaller time frame like the 5 minutes. I'm sure you even get more refined entry points. Now see this. Look at a clear picture here. Look at where we placed. We saw something here, a bullish movement here, and we're expecting that price will definitely come to that price point. And now on the 5 minute time frame, what do we see? We see this bullish candle to be the last bullish movement before the reversal. Now when you even go further, you see that there are some bullish candles even here before this candles that came to deceive us. Okay, so let's consider those smaller ones. It will even give you a more refined entry and give you even a lower point of entry. Look at it. Look at this. 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 Let's say this is the highest point of this price. When the candle broke above the price, when this particular candle broke above the highest price of this particular candle, I'm using both candles, but I can use one because it's a continuous bullish candle. So let me use just one so that in your refining you also become more refined. So this one, price broke above it. This price closed above the highest point of this candle. And what happened? Then the next candle that opened didn't even close below it. It closed above it. The next candle came close above it. Now this is an entry we are waiting for. This candle moves up here. Immediately it comes down, touches the wick, touches the highest point of this particular bullish candle that deceived us. Quickly is an entry point. We enter from here. We enter from here. Price never retraced back. So even with this, you may even be a little bit skeptical with this and all. Now let's go back to our 15 minutes time frame. So if you are considering this candle, when price came down, it never even touched it. This is a clear entry. If you couldn't enter from here, so the clear entry, you enter from here, and then you begin to ride the market. You begin to ride the market. Let's look at how many pips, if you're supposed to ride the market, you would have taken. Um, let's look at it. Currently 50, 60. Even if you are using the lowest pip on this currency pair, okay, if you are using the lowest pip on this currency pair, sorry, lot size on this currency pair, this at this point you have almost $100 already. At this point you have $100 already. At this price point you have $100 already. If you had kept the trade till this point, you had a $130 already. Assuming you had $100 and you open a lot size of 0.005, you have $500. I mean, cool money, right? And I gave the clear signal. I gave the signal too nice and too clear and too simple to enter. All right. So guys, this is my setup, and this is how I refine my setups. I look at where institutions are making entries. I look at where the institutions are placing orders, and I jump in and I hop in and I enjoy the ride. All right, and I enjoy the ride and I enjoy the ride. That's basically how institutional orders do their thing. That's how institutional traders do their thing. All right. So guys, maybe I'll leave you here, and then I'll try and organize this video well. Of course, it was in bits, so that I give you a correct video on this. That's how I wanted to open the chat on the laptop for you to computer for you to see well and clearly. All right. Okay. So basically that is all for today. So guys, we still hold on to the trade, and then I told you where price was going to go. So where price was going to go, and I don't encourage people to over trade, so this entry, actually I gave an exit point, that for instance, if you had followed the signal and entered, the exit was supposed to be just above this candle. So your stop loss, your take profit should have been here. So if you had entered from, let's say, here, from where I took the trade to this point, at least depending on your loss, the lowest lot size, you would have made some $40 profit, which is good. Okay, which is good. All right, so guys, here, this is where I end the video for today, and then I'm hoping that you did enjoy. If you have any questions, if you have further um anything to ask, you can post it in the comment section, and then we would respond to you. All right, so do enjoy your evening, and then I hope you have a nice evening. All right, that's bye for now.